Welcome back to Yahoo Finance Live. Jared Blikre is standing by for us down at the New York Stock Exchange. Jared, you are not in a Topgolf, but good to see you nonetheless.
You bet, Brian. I'm looking at the S&P 500, and this is a pain trade going on right here on the Wi-Fi Interactive. I was talking about the 4,600 level. That is these highs from earlier in the year. That's early February, right before the conflict in the Ukraine, and now we are punching above them. And this is where you can get a short covering rally. You have to be careful or be on the lookout for a false break to the upside, but we have a lot of momentum here. It's worth remembering how bearish sentiment was at these lows. And for what it's worth, there could have been a lot worse developments that actually happened. We could have had a full-scale land war erupt in Europe, and that was definitely not priced in at the time. But given the momentum that we've had to the upside, there's every reason why it should continue the pace at least into the end of the month here, and especially into the new month. Now, what I was talking about, there is some pension fund rebalancing. We have to be careful. $22 billion for sale. Also probably going to see bond yields back off a little bit as pension funds are buying back some of those bonds, thus acting negatively on the yields. But aside from that, there is a lot of bullishness in this market. But we also have to keep in mind that the market's job is to separate as much money from people as possible and to frustrate them as often as possible, as great a percentage of the time. And so we could easily find ourselves at record highs, FOMO kicking in only to reverse to the downside. So I think that's more of the market that we're in right now. Liquidity is still low. We don't have conviction among hedge funds. So all in all, it's nice to see all this green on the screen, but nevertheless, a little bit of caution is still warranted.
That seems like that's true most of the time, whichever way you're going, I think, Jared. We were earlier talking about the streak that GameStop had been on, but there's another slightly more important stock in the market that's also been on a winning streak.
Yeah, Apple, I think we're up to 10 days. And I was looking at some of the charts here. A year to date on Apple is looking pretty good. Guess what? 15 basis points away from turning green on the year. But I think it's more instructive to look at a slightly longer term time frame. Here's a 1 year, and you can see here are the highs, the record highs from last year. Broke through this trend line with a lot of momentum. I think in the last few days, $400 billion in market cap alone has been ascribed to Apple. You take a look at some of these other charts in the mega caps. Microsoft looking bullish as well. Now, it had sold off a bit more, found its footing around these important lows here, and it's off to the races. Now, they are at an important inflection point that has been support and resistance before. That's around 315. Might take a little bit of a pause there. Let's move on to Alphabet, and we can see we did find support at these lows over here, and we are probably going to head up and test those highs up there. I don't see much in the way of resistance toward testing those record highs. And finally, Tesla. Be remiss if we didn't take a look at Tesla. Now, this stock was down about 43%, and looking at some big areas it's clearing right now. This is a minor one. Probably have the momentum to reach those record highs once again, guys.
Wouldn't be a trading session without looking in at Tesla shares. Jared Blikre, thanks so much.